What's going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. In this video, we're going to go over SPY, and we're also going to give you some key levels on names such as Apple, IWM, QQQ, and Tesla. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where to enter, where to take profits, and where to cut losses if you have to. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where the first thing we have to point out is the fact that we are trading back below this key trend line. Now, if you've watched our videos over the last several weeks, you know this trend line has been our main bullish and bearish split, which means it is our main pivot point. This trend line's significance comes from these two rejections that we saw in the earlier part of the year. We can see that every time we face this trend line, we have sold off for the weeks to follow. Now this time around, we are testing it. We tried our hand at it once and we got rejected back below, and now once again we have gotten rejected back below. Now the good news is we're still trading above the 10 and 20-day moving averages as of today, and volume seems to be coming back in. You can see that although we gapped down, we still managed to finish above those levels. Now going into the shorter term candles on SPY, if you are bullish, you're going to need a breakout above 440.15 in order for us to continue our push. And this is supposed to say 444, my apologies. So above 440.15, we can move to 444.30, but the true breakout won't be until we move above that level. If we are able to move and close above that level tomorrow, which is Friday, then we have potential of moving towards 448 going into next week. If we close anywhere below that level, we are still at risk of turning back down. Now, if you are bearish on the market, of course, you have to take a look at today's lows. Where did we reverse today? And it was right above 437. Therefore, we placed our support at 437.05. If we move below that level, then we can fill this gap back down. Now, we won't turn very bearish on the market until we close below 431.15. Up until then, it is not safe to swing puts because the market is still generally very bullish. But if we close below that 431 mark, then we may take on a put position as a swing towards 425 to 426. Now keep in mind, these are all very ambitious levels, both to the top side and the downside, so not all these are guaranteed to hit on a Friday or just a single day alone. So make sure you check back in on Sunday because we'll be updating these levels again. Now before we move on to our next stock, we have to talk about why we gapped down today. The simple answer that all headlines are pointing to is going to be June's private employment. We can see that we added 497,000 jobs in June, doubling what analysts expected. Now, at face value, this is indeed good news because our economy seems to be thriving and unemployment seems to be at a very historic low. However, the fact that we're adding jobs in the middle of an interest rate hike where we're trying to control inflation is a bad sign because it means that more interest rate hikes are likely to come. In fact, after the report was released, the chances of an interest rate hike in November jumped from 36% to 46%. Now, November is a long time away, but the market had a knee-jerk reaction and gapped down on the news today, thinking that yes, indeed, we will have an interest rate hike based on these numbers. Now, moving on to our next stock, we're going to talk about Apple. So let's talk about Apple on the daily candles, where you can see that Apple, despite the market pullback, still maintained its 10-day moving average. This is absolutely incredible for a stock because you don't often see a stock move for almost 6 months now without a strong pullback. The stock has managed to stay above its 10 and 20-day moving averages almost the entire time, with just a couple days where it gapped below but quickly got bought up. So this stock is as bullish as it could be, and here are some levels to focus on. If you're looking at Apple short term, you need a close above 193. In fact, we were looking for that close today. We were talking to our group and we were looking for that close above 193 for us to swing calls. You can see that we had our setup here and we were looking for that close. We ended up taking profits at 139 by end of day from 126, but Apple did not give us that 193 close. Therefore, we did not swing these calls. But going into tomorrow, if we do get that close, then we will be swinging calls into next week. Of course, the true breakout is 194.48, which is Apple's all-time high. So if it can move above that point, then we can expect its move to continue towards 200. To the downside, of course, we have to calculate both sides just in case we do get a sell-off. We do have a support at 189. This was the lowest point that Apple came down to today and reversed off of. If it moves below that level, it's still not in very bearish territory, but if it moves below 187.55, then we may take on a day trade or a short put towards 185. This would strictly be a day trade. We would not swing puts against Apple because it's such a strong stock right now, but we may take advantage of a day trade if it gives us down to the downside. Now, the next stock on our watches is going to be IWM, and this is an ETF rather than a stock. You can see that IWM gapped below its 10 and 20-day moving averages after forming what could be a double top right below 190. So this is a very significant pullback, and if we move below 180, then IWM and the Russell 2000 could be in trouble. So let's talk about IWM on the shorter term time frame, where you can see that it's a little crowded. There's a lot of resistance and support points to deal with, and they're all very close to each other. This is what we call a choppy market where swing trades may not work. So you have to be careful and you have to make sure that you're kind of adapting to the market that you're in. I know swings have been the trend lately and they have been very profitable, but right now, just this week, it seems like the market is range trading, and that's probably because of the lowered volume that we saw on Monday and Wednesday after the holiday. So as volume picks back up, we may start seeing swings again going into next week, but for now, keep in mind that this is a very choppy market, hence why there are so many resistance and support points that we have on our charts. So if you are looking for a bullish move on IWM going into tomorrow, you can potentially day trade it above 193 towards 194.75, and if it moves above that point, then it can move towards 186.70. However, we will not take on calls for IWM until it moves above 189.24. That is calls for a swing. Call day trades are possible to these resistance points. However, for a swing, we need that close above 189.24 to comfortably swing it. If you are bearish on the market and you're looking for the downside, then you need a break of 180.40 in order for it to move to 179.50. However, the true break won't be until 179.50 towards 178. The next stock on our watches is going to be QQQ or Triple Q, which is the tech index. Like Apple, the tech index has done a phenomenal job at holding that 10 and 20-day moving average. Even through the pullback today, it managed to close above those points. So we may see a bullish move going into tomorrow if it opens above them. Now, if you're looking for shorter term time frame levels for Triple Q, for a day trade, if you need a bullish breakout, it's going to be above the 367.95 mark. You have the potential of filling the gap towards 370, which would be your first price target. So let's place a resistance there, and we're going to make that the gap fill towards 370. And above 370, it can move towards 372.85, but it's not safe to swing calls until it closes above that level, simply because that is the highest point of rejection that it's seen in recent times. So we need bulls to prove themselves above that point before we can safely swing it towards our next price target of 374 to 376. If you are bearish on Triple Q, a day trade may be possible for a put position below 364.50, and you can take profits right around here. But if you're looking to swing puts, you don't want to swing puts unless you break below 361.70. Better yet, 357.50, because this was the strongest point of reversal in recent trading history. Below that level, we can see 354 to 355. Nobody knows which direction the market will go. After analyzing many option flows on many stocks, there's a split right now. A lot of people are betting on calls and a lot of people are betting on puts. So right now the market is very choppy for reasons we talked about earlier. Now, moving on to Tesla, and before we jump into this, we just want to remind you that we will be updating these levels on Sunday, so make sure that you check back in, and if you're not already subscribed, make sure you do so, and please don't forget to thumbs up. Now let's talk about Tesla. Tesla didn't see as intense of a drop as the rest of the market today, but nonetheless, it still dropped and it closed just below the previous day's lows, which means it broke its overnight uptrend. So if you're looking at Tesla on the daily candles, you can see that Tesla is still trading relatively high, close to the gap up that it saw after it sent out its delivery numbers. Now this could be forming what is known as a bullish flag. However, the fact that it broke below that today and it kind of closed at the low of it means that Tesla could see more downside if the market decides to sell off. So if Tesla closes below 272.80, or if it moves below that level, then we can see a steep downfall back towards 261 to 262 or 263. Below that level, we can see 253.60, which is a little bit of an ambitious downside price target. But because of this gap here, there's not much support that Tesla has. So if it loses the support today, where it saw that big reversal, which honestly wasn't even that big of a reversal, you can see that it stayed kind of low. So if it breaks below that level, then bulls may lose confidence in this gap and they may quickly take profits to the downside. Now, if you're bullish on Tesla, you're going to need a breakout above 278.70 for it to move to a day trade price target of 284.25. But it's not safe to swing calls, at least short-term calls, until it closes above 284.25. If it moves and closes above that point, then you may take on calls to a price target of around 289 to 290. So that's all we have for you guys. I hope you guys enjoyed this video. Thank you so much for checking in. Don't forget to subscribe and like.